Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Senior Technical Analyst with Market Rebellion, and this is a daily candle chart of the Invesco QQQ Trust, ticker symbol QQQ. Basically represents the tech sector. And if you remember a couple of weeks ago, I identified what we called an A, B, C, D pattern. Remember, I called that the lightning bolt. And I said that when you see an A, B, C, D pattern like that, you generally see a price at D that winds up lower than B. And that's exactly how the market worked out. Now, in the midweek report on Wednesday, I drew these extra lines here, and I said that we would most likely rally on Thursday and Friday. I said on Thursday the target was 298.08. Look at that. We went to 298.13 on the high. So we beat that by 5 cents, and then we came right back down. Now, we're pennies away from this downside target here and here. And I'm going to clean up my chart just a little bit. I will redraw this trend line back here, but I want to make the chart really clean so you can see what I'm expecting for next week. Now, taking a look at your trading checklist, if you have a copy of that, that'd be great. I'll give you a video that'll lead you to that trading checklist at the end of this video, so stand by for that. But down below, we still have an increase in volume on the way down, but that is a doji candle. Dojis are usually found at pivot points. You can see that here is a doji right there. We came very close to forming a doji here. It's more of a spinning top. Here's a doji at the top there. And so I think that Monday we could see an actual drop in volume and then maybe a little bit of a bounce. Now, I'm not going to go right back into an ABCD pattern, but I am going to draw an upside target that's going to be very slight. Remember, I believe that's going to happen on lighter volume. And the upside target on that is 295.70. Now, keep in mind that my reports are mainly directed towards swing traders and option traders who look forward to these pivot points so that they can adjust their positions accordingly and collect the cash. And we had another good week this week as Expiration Friday allowed us to take in some more credit. So if you're an option trader, I'm sure you're appreciating these forecasts and target numbers. So thank you for following, and also thank you for liking and commenting and sharing these videos, because you're really doing us a great favor in helping us build this channel. So please keep that up. Share the video with as many people as you know who trade the markets or even invest in the markets, and I'll keep you posted each and every week. So that is QQQ. Let's take a look at IWM. This is the ETF that basically tracks the small cap stocks. And right here on Thursday, we almost hit that target that I drew on Wednesday. We definitely hit the downside target. Now remember, this was another ABCD zigzag, where last week my forecast was that we would go up, hit the pivot, and then pull back. So I kept that downside target. It was on Tuesday right here that we hit that downside target, and then we bounce again, just like I thought we would on Wednesday. Now, here's another one. I'm going to clean up the charts, make it nice and fresh and clean. And so we have an interesting pattern here with the stochastic. We have a hinge up while the CCI is still going down, but the CCI is showing a higher low down here. I don't know if you could see that. See, we have a higher low while we had a lower price low. That's known as a positive divergence. And so I do believe that we're going to go up just a little bit on Monday, Tuesday, and bump our heads against this moving average right here, which is going to be, again, trailing lower now that the price is down below that moving average. So you're going to see the continuation of this bend, if you will, on the moving average, and that's going to act as resistance. So stay tuned. I think we're going to see much lower prices on the downside eventually, but I'm looking forward to this bounce here next week with an upside target on IWM at 189.46. So that is IWM. Now, if we look at the diamonds, ticker symbol DIA, it's basically representing the Dow stocks. We hit our targets week after week. Again, go back, look at this. Upside target hit, hit, downside target hit, upside target hit, 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 right here. And it just keeps going on. We have a very high percentage of accuracy. And in fact, one of our members, his name is Adrian, I'll keep his privacy there. He has developed a program that tracks all my individual stock picks that I do on Wednesday night. And he came up and showed us that software, and it was absolutely amazing. Now, I'm not making an income claim here by any stretch. I'm just repeating what Adrian gave us as far as his data. And he said that my analysis on the weekly forecast is 73.8% accurate. And here's the interesting thing. He said that the targets usually hit within 2 months. So if you're an option trader, you want to make sure you give yourself enough time. Now you have to remember, well, that's a very high hit rate, a percentage of accuracy. In fact, I don't think anyone in the world has that. The star favorites that I mentioned are over 80% accurate with the hit rate. Now, what does that really mean? What that means is that 26% of the time I'm going to be wrong, and you could have severe swings down and up before those targets are hit. So you have to manage risk. That's the big lesson there in what we found out in that percentage of accuracy. So be really careful in this market. I think the volatility is going to continue to increase. We'll get to that in a little bit. But as far as the diamonds, I'm going to make a forecast again to the upside. Not a big upside target, but that's going to be big enough for traders to take advantage. And that upside target for the diamonds is 331.38. And I think we could see that by next week, the end of next week, that is. Now, again, we have the stochastics moving up. We have a positive divergence on the CCI. We have a wide divergence here. See this wide divergence from the moving average? The stock does not like to stay that far away from the moving average before snapping back to it. So that's another reason why I call that the rubber band effect. It tends to snap back to the moving average. So this upside forecast right there on a drop in volume, by the way, today, and a spinning top, that upside forecast is a conservative forecast at 331.38. All right, so that's the diamonds. Now, we're coming into the stretch here with the spiders, SPY. It's going to be the same story. You can see that this was drawn on Wednesday. We hit my upside target and my downside target from last week. Again, this was the midweek report. I drew that out there. And again, we have a lot of success with hitting targets on SPY. And so moving forward into next week, I have a green candle after a stretch of red. I'm going to erase all these lines again, starting fresh on the board here. And I think that the SPY is going to bounce and a little bit more aggressively, I think, up to this resistance high right here. So upside target on SPY is 401.17. Remember that that moving average is now going to make a hard turn lower. So the moving average and this resistance point are more or less going to double up as a wall that the buyers are going to have a hard time getting through. Right, so that is SPY. Now, for the VIX, ticker symbol VIX, the volatility index, on Wednesday I went out and made another guarantee, as I usually do at the VIX. I said that there's a 100% chance that the VIX would fill that gap. That's the gap that I was referring to. Right, so on Wednesday, the gap was in place. On Thursday, we came back down, filled the gap. And now it looks like the VIX is wanting to bounce here. I do think the VIX is going to drop just a little bit. I'm going to clear all these lines off here. I do believe the VIX is going to drop on Monday, and then I think it's going to rip to the upside. I really think that that is looking more bullish than bearish. We have an inverted hammer on the way down that is doubling as a bullish harami. And the CCI is starting to pivot up. We got conflicting signals on the oscillators, hence the reason why I think we're going to go a little bit lower on the VIX on Monday, possibly Tuesday, and then the rest of the week I think we're going to start moving higher on the VIX. So option traders, fasten your seatbelts, get ready, and we're going to take a little ride there. Now, for the geopolitical news, I'm going to make this very brief because there's a lot going on this week with existing home sales literally shocking the market lower. Look at that. If you look at that, there is no pivot point or hinge or anything like that. This is the lowest level on record for existing home sales, dropping with a 37% collapse. And obviously, that's not good for the economy. It's telling us the real estate market is going to continue to have pressure. It's going to get hit. Investors and home sellers are going to have a tough time. Those who are selling their homes are lowering prices. I know, because we're looking to buy more property, and the properties I'm looking at, we're seeing price decreases left and right on Zillow. So I think that market is extremely soft and in danger of a crash, actually, like we saw in 2007 into 2008. Now, in addition to that, we're looking at the 7-year Treasury auction moving higher. Now, most people don't really track the 7-year. It's more of the 2-year versus the 10-year. And I'm going to talk a little bit about that. But this is telling us that rates are going higher on the 7-year, right? So when you look at the yield curve, we haven't seen an inversion like this since the 1980s, but it's getting much worse. You see, if you look at the gray area on these charts, this is from the Federal Reserve, by the way, you'll notice that when the curve goes so inverted, it generally is followed by recessions. And the width of these gray vertical bars here is basically representing the length of the recession and how long it lasted. You can see that in 2008, it lasted a good long time. We even called that the Great Recession. And I think, being that the inversion is so deep right now, I think you're going to see a massive recession following this year, and no one wants to talk about it. Now, that could be scary if you don't know how to prepare for it, but I did a presentation on cycles. You have to understand that recessions are part of the economic cycle. If we don't get recessions to help with a reset and controlling inflation, then inflation runs away and we all lose money, because inflation's a big fat tax, right? So keep an eye on this, and you might want to track the inverted yield curve. This is basically the 10-year. You can see right at the top of the page here, it's the 10-year Treasury minus the 2-year. And that's what they're tracking right there. Now, again, more economic numbers with regard to inflation. You can see right here that the Fed gauges are running hot. This came out earlier in the week, but this came out today. And you could see, I'm just going to explain this just very briefly. The red line represents personal consumption expenditures. This is the number that spooked the market early in the morning when we first opened. It came in much higher than expected. The green line represents U.S. personal income year over year. So when the red line is over the green line, keeping this very simple, that means that consumers and our U.S. citizens are making less money overall. They have less available cash to go shopping with. If you go back and look at the times when that has happened in the past, right there and right in here, that was the bear market of 2000 and the recession that followed. This was the crash of 2008 and the recession that followed. So here we are again, history repeating itself, but with an indication that this is getting worse. They are more or less widening and pulling from one another. And you can see the red line, the personal expenditures, is now ticking up again. That's what shocked the market this morning. Now, militarily, you can see this headline. This came out this week. The Biden administration plans to quadruple U.S. troop presence in Taiwan against the rising threat in China. Well, guess what? Today, this happened. A Chinese jet shattered a U.S. aircraft over the South China Sea. Tensions were high, and I keep telling people, keep your eye on China, keep your eye on China. I'm not going to stop telling you that. I think the war is escalating. The markets are not going to like that. And when you're looking at China and you flip over to see what's happening in Russia, today at the UN, the permanent representative of the Russian Federation to the UN noted that they perceive events in Ukraine as a war with the West for survival. That's a key word right there. There's two key words. Obviously, war with the West, right? War and survival. They are fighting for their survival. They are fighting in their minds. They are fighting to preserve their culture. They're fighting to preserve their country. And Putin's ratings are going up in Russia because people see the unification of Russia, and not as an offensive against the West. They're seeing this as preservation of the Russian culture. Right? So this is very serious. When you get to this level, tensions are high. I pray that we do not wind up in World War III, but it certainly looks like the warmongers are pushing for this. They turn China's peace talks down. They keep ramping things up in Ukraine. This is an absolute mess. Now, remember, when I look at the markets, I look at the markets from a technical standpoint, and I follow my trading checklist. If you like, you can go and take your phone, take a picture of that scan coder right there, take a picture of a little square, and that will bring you to the website. You could also go to marketrebellion.com/checklist, and it will bring you to a video that will explain how you can get your hands on my trading checklist. That's one of the reasons why the percentage of accuracy is so high, and what the program that Adrian put together is showing just under 74% accuracy and over 80% accuracy on the star favorites. And my goal is to teach you how to do that so you don't have to rely on me or anyone else to tell you when to get in or out of trade. Just follow the trading checklist, follow the charts, and have a great week. So we'll talk to you next time, folks. Have a good weekend. Bye-bye. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here, and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.